Trading and investing has gone social in a huge way. Many of today's savviest active traders aren't just doing their own work and research and putting real money to risk in the markets alone, they're bouncing ideas off fellow traders with skin in the game. They're sourcing new opportunities on social media platforms, and they're using crowdsourced data to find an edge. As a result, retail investors have become a force like never before in today's market, one traditional Wall Street has to reckon with. To help you understand why this is happening and how you can use this trend to profit, I convened a social investing roundtable this week for the MoneyShow MoneyMasters Podcast. Joining me are a trio of experts who are personally at the forefront of this movement and whose companies are making waves in the industry today. They are Gav Blaxberg, CEO of Wolf Financial, Tom Bruni, Editor-in-Chief and VP of Community at Stocktwits, and Tim Johnson, Head of Brand Partnerships at Blossom Social. Gentlemen, thank you for joining me today.
Hi guys, thank you so much for joining me. I feel like I got a real experts sort of gallery here of people that are involved in social investing, so I appreciate you taking some time out. I know it's changing the landscape in the markets, you know it's changing the landscape in the markets and just the experience of today's trader, but I do want to kind of go around the room and give each of you a chance to talk a little bit about how what you do fits into that trend and sort of, you know, what you're seeing in this market. And I guess we'll start with you, Gav. Just kind of, again, explain your background, what it is you do with Wolf, and we'll go from there.
Absolutely. Yeah, my background with Wolf, I started this a little bit over 5 years ago with the goal of just teaching people to invest. Originally, the idea was through an app. It transitioned fully to online social media. We really locked in on Twitter Spaces. Now we host hundreds of hours of Spaces every single month across several channels. For me, it's really interesting because day to day you get to come in and see exactly what retail is talking about. We're live with about 15 to 20,000 people a day, commenting, engaging, looking for trades, looking for insights. So for me, it's always a new day in the market every single day. There's always something that you're looking to talk about, and it's just constantly moving.
Yeah. Tom, I know Stocktwits has been around for a while, but you guys have really kind of revolutionized and changed some of the things you're doing today. So, what are you seeing out there? What are you guys up to?
Yeah, Stocktwits is all about the real-time conversation of what's happening in markets now. So it's where attention and kind of market action meets. So it puts it in a really unique position to, not only see what retail is talking about, but how they're feeling about specific topics. So we have robust sentiment data, message volume data. We're rolling out some new features like most bullish and most bearish lists. We're all about discoverability and context and helping people understand what's moving and connecting with the right people and the right information to help them make better decisions.
Got it. And Tim, I know obviously from being at the Money Show Toronto for the last few years and following some of what you've done there with Blossom in Canada, talk a little bit about the app and kind of, again, how what you do fits into this social theme.
Blossom is the social network for investors, so it really feels like a Twitter meets an Instagram that built from the ground up for the investing community. And really, our community is very much so long-term investors who are looking to build wealth. And it's the place where people share those wealth generation strategies, the best ETFs and stocks to buy. And it's all backed up by your portfolio. So the twist with Blossom is that you can link your brokerage, which gives a full scope, very transparent. You can share what you're doing with everyone. If you want to learn from other people, see what they're doing, all completely transparent and backed up by that brokerage link in. Just crossed 375,000 people using the app and expanding pretty fast in the States, which has been very exciting as well. So growing by 10,000 a week at the moment.
Great. Well, hey, congrats on what you guys have going and congrats on the recent growth. And this one's going to just kind of be for anybody on the table here, virtually speaking. Why is investing so much more of a social experience today? I mean, why are people going online, going on apps, going on spaces, so much more than in the past and just so much more than just sort of talking around the water cooler back in the old days?
Yeah, I can jump in. I think in my experience is because people are looking for conviction. And it's really hard for people sometimes to build their own conviction because they feel like, hey, no, I don't have a finance degree. I haven't gone and spent hours and hours and hours of researching this. Maybe they don't know how to research it. And so they're flocking to others because it used to be things were a lot more gatekept, right? Most of the people who had financial advice to give were saying, hey, give me your money and I'll manage it. I'm not going to be able to put that out on social media for free. And now it's moved to the other way where people say, I see way more value in just having a big audience. There's other ways that I can monetize that. I don't need to make it off people giving me their money, and instead I'm going to share my thoughts there. And so I think people are coming out of the woodwork with many more ideas, and also people are flocking to try to take those ideas and build their own conviction off of it to say, hey, I see what this person's doing. Let me try to understand it deeper. And I think that that's what created all these social networks is just people trying to build conviction off of others.
Yeah. Tom, what about your thoughts on that? I mean, I don't know what you guys are up to in terms of daily stock twits, how many comments are out there per day, per week, but I know the traffic's been outstanding.
Yeah, I would say it's more of a necessity, right? Information and access has kind of like become table stakes at this point. So, Howard Lindzen likes to say it's never been easier to invest, but it's never been harder to stay invested because there's so much noise, there's so much information out there. And so really the goal of a social network and relying on others is to filter through that information and understand, what's relevant for your investment strategy, what's noise, how to incorporate different strategies that maybe you've never heard of. And so again, just discoverability and the real-time nature of markets. I think that the holding period for a stock has shrunk from like, years and years, decades ago to like sometimes hours or minutes in many cases. So, just with the speed of markets and how things have evolved, I think the real-time network of people being online to kind of sort through this information and figure out what's valuable and what's not is a necessity. And that's I think that's the hole that we're all filling here. We're all about community and we're all about connecting and trying to sort through the noise and find information that's relevant for your individual strategy.
Yeah. Tim, I don't mind dating myself a little bit here. I mean, I kind of started in this business in the very late 1990s. Back then, it was Yahoo message boards and Raging Bull message boards, and there was just a lot of junk out there when it came to stock tips and ideas. With your platform and today's environment, how is it different? How do you sort of, as an investor or trader, separate the pretenders from people who really know what they're talking about?
Yeah, I mean, I think for us having the linked brokerage aspect is really cool because you can actually see when people are hyping up a stock, you can see how much of their portfolio they're taking a position on it. It's like, okay, here's a big long post why you should buy the stock. Look at the portfolio. Guess what? It's taking up 0.01%. It's just some fun money that they're playing with. The rest is in super safe stuff. Maybe you should be thinking about it in a similar way. And also, it brings this good culture of having people admit their losses when they're wrong. Hey, I sold this at a loss. Hey, I bet on the wrong stock here. That transparency actually breeds a little bit of trust, and really is like changing the game. Like you say, people want to share their winnings. People take screenshots and not profits, right? But once you kind of have that transparent stuff and people can see really how you're doing and how you're doing on that position, that changes it completely. It really does. So that's quite an exciting shift that we're seeing.
Yeah, absolutely. I want to kind of talk about maybe some recent examples, some recent ideas. What are some of the things that you guys are seeing, your speakers talk about on Spaces, in your case, Gav, or Tom, what you're sort of surfacing on the platform, and you as well, Tim? Any, trades, any trends, things that have really stood out recently in this market?
I thought one that I saw this morning was pretty interesting from Jaguar. If people are familiar with him, I think it's Jaguar Analytics, who I follow a lot of posts from. He talked about froth right now in the market and how there's 6 baskets that have the most froth. And those are quantum computing, drones, air taxis, nuclear energy, space tech, and crypto treasuries. And these are just basically areas where you're seeing massive increases in valuation. Companies, not really doing anything but tripling in a matter of days, sometimes weeks. And so looking at those areas, I think that there's opportunity now, especially with earnings season. And he's basically talked about how he wants to short all of those areas right now and basically just take the froth down. And I think that this is a common theme that people are seeing, right? We're rotating a little bit more into maybe like a Google and NVIDIA, these leaders that have more proven track record, and some of the froth is starting to fade. And so it's an interesting little trend right now.
Okay. Tom, same question to you. I mean, what are you kind of hearing about or seeing that's interesting to you on the Stocktwits platform?
I mean, that's a bit of a loaded question. The last couple of weeks have been meme stock mania all over again. We had Open Door kind of kick things off on July 14th. And since then, we've had Kohl's, Krispy Kreme, Wendy's, GoPro. Basically, any highly shorted stock is on the move right now. We're also seeing that kind of risk appetite go to meme coins as well. Not to call Ethereum a meme coin, but on the, altcoin spectrum, we're seeing a lot more risk appetite there. Obviously, we've got treasury companies coming in and buying Ethereum. So we're just seeing risk appetite in general be quite robust at this point. And, it makes sense. We've had a record rally over the last 3 months. We're coming off, 2 years of 25% back-to-back returns. So like animal spirits are alive and well. People are really embracing risk while it's still paying. But one thing I have noticed over the last week is, it seems like the conversation is shifting back to earnings. We've had our fun for the last, three-ish months focused on the macro, but now people are looking at the actual fundamentals and saying, okay, Palantir is up 300% in the last, 6 months. Do the fundamentals actually support this? So I think that's a big theme. There's a lot of froth. There's a lot of risk taking right now, but ultimately it's going to be fundamentals and earnings that bring these, either support these valuations or bring them back down to earth.
Yeah. Tim, what do you see at a time like this? I mean, is there basically the same kind of appetite for those types of names, amongst the Canadian investors you predominantly serve? Or, what are you seeing as far as ideas that people are talking about in this stage in the markets?
Yeah, seeing a little bit of a different trend. We're seeing a very big passive income trend on Blossom. When I say passive income, I mean covered call ETFs. But what is interesting is that I'm seeing these covered call single stock ETFs being built off some of the meme stocks as well. So we're seeing that those two things kind of collide and meet, and then trading that volatility for income. And so we have these kind of two camps: growth, covered calls. This is like a big trend that I'm seeing on Blossom. I think maybe because our audience is a little bit more longer term buy and hold, a little bit less meme and trading. That's probably why we're seeing some of this happening. But the covered call piece is fascinating to me.
Okay. And what about big picture in markets, sort of thoughts on Canadian investing versus investing in the US? I mean, is there more money being invested at home versus cross-border? I'm kind of curious what you've seen specifically.
Yeah, always in Canada, there's a very large home country bias. And I think, interestingly, I guess I've seen a little shift. This is anecdotal. I'd need to go and really look at the data. But I've seen a little bit of a shift into more Canadian branded, Canadian themed asset managers. So that's something that I've noticed as well. But more to come there, will show us. It seems like US current tensions are definitely calming down, and so we'll see how that tracks over the next couple of years.
I've got it. Tom, I know that you guys have data. You have things like the Stocktwits sort of sentiment indicator. What are you seeing with that, and how can an investor use information like that if they're trying to get a little bit of an edge here?
Yeah, I think the first piece of this is just understanding where attention is flowing. So much of what happens in the market happens first in conversation. So before people are, making a trade, making an investment, they're talking about it, they're researching it. And so seeing what they're searching for, what they're having conversations about, and what strategies they're talking about can give you an idea of where kind of the overall retail money pool is flowing. From a sentiment perspective, I think, again, we have aggregate data. So knowing, especially when you're trading these momentum stocks, knowing when there is a kind of a pullback in terms of sentiment or message volume. When a stock is up 200-300%, you need that next marginal buyer to come in and pay that higher price. And so if you see fewer and fewer people talking about the stock, that could indicate that, hey, maybe there's something here. Same thing on the downside too. You need that next marginal seller, like who's left to sell in some cases. So we're seeing a lot of these brand name companies. Intel, UPS is down 10% today on earnings. So we're seeing kind of some, attention towards those names that are kind of being left for dead, and people looking for divergences and saying, okay, the stock price is doing X, sentiment and message volume are doing Y. Does that make sense? And is there an opportunity there?
Yeah, PayPal also similar vein, getting killed today off a big beat.
Yeah, so again, a little bit of a shift in news and reaction to news, I guess probably fair to call it that.
Yeah, I mean, the market's all about expectations, right? The news itself is not really important. It's the market's reaction to the news. And depending on what's priced in, again, you could have a really good earnings report and the stock could be down because it's kind of priced for perfection. So whether you're a long-term investor or a trader, it's important to just know where overall sentiment is, because that is either a headwind or a tailwind for stock. And we're seeing more and more people lean into that data as this kind of retail money pool grows and becomes more and more important in the market.
Got it. So I guess my next question would be kind of where you see things going from here. I mean, with the trend being so powerful, being different ways, different platforms you can access, sort of tap into that social network. I mean, Gav, starting with you, what do you see as the next step in this process?
the bigger trend of people just flocking to social media?
Yeah, like, where does it go? Again, what continues to fuel growth? Are there any obstacles that you think are going to be put in place? Again, just sort of putting your long-term hat on.
Well, I think you're seeing this, for example, obviously with Stocktwits and then, of course, with Blossom, you're seeing people build specifically for it, right? Saying, hey, we see investors want these type of tools, so we're going to build them directly into social media. Tim made a great point with Blossom. I share a portfolio publicly on there. It's doing awesome. It's up like 60% year to date. And so for my audience, that can give them a lot of confidence when they're listening to my spaces. And then they go in and they actually see the conviction of the portfolio. And they're like, oh, this guy actually, buys PLTR, bought Hood, right? Held them through and pieces like that. And so I think just adding the features is pretty cool. And even on Twitter, I think that they're getting a little bit around to it one of these days. Maybe with the new head of product, they're adding some of these features. They've added, the charts directly in. It's pieces like that. But I think you're going to see people build for it. And then the other side of it is I think you're just going to see a continuous wave of retail investors that are now trying to build their own audiences on social media, right? Even people who have no interest in managing money or anything like that, they're just going to flock to it and start posting themselves. You have this like 95% of people right now on social media are just observers. They never actually post or create anything. And I think you're going to see that number shift, kind of like how retail investing, right? We used to make up maybe 10-15% of the market, and now they're 20-25%. I actually think you'll see a similar shift in people that actually create and post content on social media, moving from 5-10% to maybe 15-20%.
It's funny that what you just said kind of made me think of something. Wall Street's always looked at retail investors. Oh, they're the dumb money, right? They're the ones who come in late. That they buy at the top and so on and so forth. But there's some really interesting stats so far this year. That you had institutional selling left and right when all this trade and tariff stuff was going on. But the retailers were buying, and who's kind of laughing at this point. So just your thoughts on the retail investors overall and where they fit into this market. So I guess I'll just throw it to whomever wants it. Maybe you, Tom, first.
Yeah, I think that narrative probably worked 20, 30, 40 years ago when there wasn't access to information and the tools, but the playing field has been pretty much leveled. I think where this goes and kind of the next phase for retail is and platforms that serve it is customization, right? Again, we're kind of in this information overflow age where it can be really difficult to know where to look or what information is relevant to you. So I think AI is going to be important component here in terms of customizing people's experience on a platform and providing them with the information, data, and people to follow that are relevant to their investment strategy. So what we're working towards at Stocktwits is if you're a small cap investor, when you log in, we'll suggest some stocks to follow. We'll suggest the people to follow in that area, really giving you that customized experience and that warm onboarding so that you can get right into the action without having to spend all this time searching through the noise. But yeah, retail's here to stay, and overall, they're becoming more and more sophisticated. Just look at Robinhood; they're building out an entire suite of products for active trading, banking, wealth management, and so I kind of keep my eye on Robinhood to see where they're building because that's where the demand is, and that's where retail is headed.
Got it. Tim, I guess I'd ask the same question to you. I mean, sort of thoughts on the retail investor and the force that they are in this market, as well as maybe, some of the things that you guys will be doing next. I know, obviously, you've got more live events and things going on that Blossom specific that you have in the works.
Yeah. There's, the great wealth transfer is happening now from boomers to millennial and Gen X and Gen Z. And we know that of millennials, 70% fire their advisor in the first year. They got used to managing their money themselves. I agree with exactly what Tom said. We're seeing this too, where people are getting comfortable investing in ETFs, and then they want to take it a little bit further. So they buy some small caps. Then they want to take it a little bit further. They start testing out options. So definitely seeing that growth in terms of what retail investors want to try and do. I think that's going to be a continued trend. For us, we just love being in the middle of this space, the middle of the great wealth transfer, and in the middle of the transfer from mutual funds to ETFs as well. So that's where Blossom absolutely loves to be. And we're bringing the community together, like you said, doing a host of events across Canada and across the USA as well. So just announced today, going to be stopping off at NASDAQ in New York, and then in LA, Chicago, and then Miami or Vegas as well. So it's a whole slew of events across October, as well as at the Money Show, of course, in Orlando, and at the Money Show in Toronto as well.
And I was going to segue into that as we kind of get to the end of our time here. Just briefly, I know we still have a little bit of time until till Toronto, and a little bit longer than that till October. What's somebody, when they come to hear you speak, kind of what are they going to get out of it? What are some of the things you think you're going to touch on there?
For myself,
Yeah.
I'm going to be doing a deep dive into influencers. So I'm setting up the interviews right now, and I'm so curious to see how they're doing. If they're not ETF buyers, how are they performing? Gav, I'm definitely going to be chatting to you about that. And then I want to speak to some of my day trading creators that we work with as well. How are they doing? How much money do they really make? And I want to pull all of this together in my presentation and share their insights, the tips, and the things to watch out for as well.
Great. And Tom, if somebody hasn't seen you at one of our past events, obviously, again, we're going to have you in Toronto. What are some of the things that you think you want to cover and touch on for people there?
Yeah, I tend to, structure my presentations in a way. I'll teach you how to fish, and then I'll show you, I'll give you some fish at the end. So I tend to walk through the platform, show you how to use our data, show how to identify the trends that I'm seeing for yourself. That way you can leave the presentation with a new tool belt and some fresh ideas. So for Toronto, I'll try to focus on some Canadian stocks. I know mining is hot right now, so it's a lot going on there. And then for Orlando, we're a couple months out, so we'll see. But come to my presentation and enjoy it if you want to learn how to fish. That's my pitch.
Perfect. And Gav, I guess just any parting words for somebody watching this, in this market or with what you do that you'd pass on, since we'll see about maybe getting you in one of our events coming up while we're here.
Yeah, I mean, I can speak to the Money Show as well. I gave one of my favorite presentations I've ever done at the Money Show that I was at in Las Vegas. And I think it's something that people haven't focused in on. They should. And that was circling all the way back to the first thing I talked about was building conviction. And I talked about at the Money Show how to scientifically manipulate your brain to build conviction in your positions through daily actions. And I thought that was really helpful because ultimately, and I'm sure you guys can relate to this, see this in a lot of retail investors, tons of people have good inclination, right? They say, hey, I see PLTR is trading at $12. This looks good. And they put $500 in, and then all of a sudden they're up 500%. And, wow, you did not make life-changing money, right? You did not have the conviction to go and say, hey, I need to double down on this, or I need to buy higher. I'm up 10%. Oh, I can't buy anymore now. And so I talked with people about how to really build the mindset of when you find something and you actually have true conviction, committing to it enough that it can create real outcomes. And I think that that's something that every single day you have to be working on as an investor. It's kind of like working out almost, right? Working that muscle and getting it stronger and stronger. So that's what I would point people towards, because in this market right now, no matter all-time highs or not, I like to say all-time highs are not bearish. There is opportunity to the upside here in different areas, but if you don't have a conviction, it's not going to turn into anything.
Yeah, absolutely. And who knows when the next, kind of major conviction test is going to come in this market. Well, listen, gentlemen, thank you so much for your insights. Appreciate you taking some time out here. Viewers, if you do want to learn more from these individuals, Tom and Tim, as I mentioned, are going to be speaking at upcoming Money Show conferences. You've got Toronto, September 12th to 13th, downtown, and in Orlando, October 16th to 18th. There's more details in the description below. Gav, I love the spaces that he does. I'm looking forward to joining him for the next Money Show one that we'll host ahead of those events. And again, thank you so much for your time.
Thanks, everyone.
Thanks, you guys.